The overnight gap up scanner. Basically, a stock runs for the day and closes at least 10% above the open. Then the price gaps up the next morning. Back in 2020 and the beginning of 2021, gap up plays were a regular occurrence. Now that the markets are slower, there are fewer. But professional day traders don't just twiddle their thumbs waiting for the next hot market. We look for volatility. Here is a stock scanner that assesses the probability of overnight gap ups. Here are the criteria, and I'll also show you how to plug this scan into your trade platform. Let's build the scanner and what it should look like. This scanner has 4 main factors. Number 1. Change from open. This finds stocks that have spiked at least 10%. Number 2. Change from previous close. This finds stocks that gapped up overnight at least 15%. Number 3. Float less than 50 million. Search for low float stocks. These are more volatile than higher float stocks. Number 4. Average daily volume. Above 500,000. High trading volume ensures liquidity. I would also add a 5th crucial factor, whether the stock has a history. Stocks that have spiked can spike again. Look to the charts to find this. This produced 8 tickers. Now, here is the general overview of these stocks. This includes the company name, the sector, the industry, the country it resides in, the market cap, the PE ratio if available. Some of these small cap stocks can be sketchy. We will talk about that in future videos. It also contains the price. I don't put a bias on price. Low float is all that matters. The change in price from yesterday and finally the volume of the previous day. Now, here are the technical statistics for these tickers. This includes the beta if available, which is a measure of volatility, the ATR or average true range, the SMA or the simple moving averages, the 52-week high and low, the RSI or the relative strength index, the price, the change from open, the gap percentage and the volume again. How to use this scanner. In the stock market, history doesn't repeat but it often rhymes. That's how former runners can run again. What is the best way to use market scans? You must build you some watch lists playa. But just because he found a bunch of stocks that gapped up doesn't mean they'll continue to run. You have to trade safely. Add the best looking plays to a watch list and wait for a pattern to set up. Now let's look at the tickers one at a time. This AGE stock. As you can see, it has had previous spikes. This is BCEL stock. As you can see, it has had previous spikes as well. This is BHAT stock. As you can see, it has had previous spikes as well. This is GFAI stock. As you can see, it has had previous spikes as well. This is GTLB stock. This one is a little different. More of a smoother accumulation and distribution. All due to its price. This is HOUR stock. This one is a little less mature. It really hasn't been listed very long. This is IMAB stock. This one doesn't appear to have any really significant spikes. In the last year anyways. This is RDBX stock. This has spiked in the past. But after the merger deal this one has been on a downward trend ever since. Until now. So build your watch lists. This is the 5-minute charts for the A tickers on the watch list. This video was produced on the 3rd weekend of March 2022. Like, share, subscribe, ring the notification bell and as always, high fives for everyone.